Gentlemen, welcome back to MGTOW Money. Today's topic, what you can invest in to make money today. Before we get to that, thank you to the ongoing support from the Patreon investors in this channel. Welcome TOW, the newest member of Patreon investors in this channel. Men, become a Patreon supporter of this channel. See the video description today. Let's get on to today's topic, which you can make money in today's markets. Men, the general trend overall today is U.S. stocks are performing very, very well, in particular in 2018. I highly recommend look at today's slides because they will support a lot of the points that I'm making today. In particular, 2018 has been an excellent year for the U.S. stock market. I stress that relative to most of all world stock markets. And so that being the case, the trend is your friend. I highly recommend, men, as you're going to see here, that you stay with the trend. You stay with things that are working. While I fully understand, I fully accept, I fully acknowledge that the U.S. stock market is way overvalued relative to price to sales, price to book, PE ratio, CAPE ratio, etc. Needless to say, the market can stay overvalued and it can become even more overvalued. And as a matter of fact, the market can stay irrational far longer than you can stay solvent. So the point is, the trend in the U.S. market is up. I expect it to continue that way at least over the next 6 to 12 months. I'm going to give you two very specific reasons why I think that's the case. One, in the next couple of weeks, we're going to be entering into traditionally, historically, what has been a very positive seasonal period for the U.S. stock market, starting in late October, going through next year to late April. Furthermore, the third year of the presidential cycle, again, see the slide on this, the third year of a presidency, the third year of the term, a la 2019, is typically the strongest year for the U.S. stock market of the four-year presidential term. Again, there's no guarantees here, men. We can only go off history, but that's where we are today. So, with all that said, I do have some specific ideas, recommendations for you. Disclaimer here as usual. I am not making any personalized recommendations. I am not making any claims or acknowledgments of things that you should do, that you must do, etc. I'm simply throwing out some ideas that you should consider researching. Furthermore, I'm going to throw out 4 ideas that I own and 4 ideas that I'm considering. Nassim Taleb, the author of The Black Swan, I'll include a link to that outstanding book that Nassim Taleb wrote over 20 years ago, amazingly, and it's still relevant today. He talked about, don't ask someone what the market's going to do, ask them what they're holding, what's in their portfolio. So here's a few things that are in my portfolio today as it stands right now. 1, I hold the ETF MINT, M-I-N-T. This to me is an outstanding way to hold cash. This is a very short-term bond fund, and actually as interest rates go up, as short-term interest rates go up, as they have been in the United States for the past 18, 24 months or so, this actually goes up in value. The yield on it goes up in value. It yields right now today close to 2.5%. This is a nice way to hold cash if you're concerned about the stock market, volatility, etc. You're getting a very nice, reasonable return on your money. ETF, MINT. A second holding that I have is JOF. This is a Japanese small capitalization stock market fund, and as opposed to EWJ, which is a general Japanese stock market ETF. Now, the reason why I like the Japanese stock market right now, if you haven't noticed, is that the Japanese stock market just hit, a 27-year high. The Japanese stock market peaked, men, in approximately 1989, and for over 25 years was a bloodbath. It was a disaster. It did nothing for years and years and years. Like the phoenix, it has arisen from the ashes. Prime Minister Abe was recently elected. There does seem to be some cooling, obviously, with North Korea and the United States and all over Asia. In addition, there might be, hopefully, a free trade agreement announced between the United States and Japan at some point in the near future. The point is that the Japanese stock market, in my personal opinion, and again, based upon my holdings, should appreciate in the future. future. Another idea that I have that I have a small position, and I emphasize a small position, is that I own a uranium stock. Yes, and I know there's at least one other commenter who's on board with what I'm talking about here. I own a particular company called CCJ, Charlie John. This is the largest miner of uranium in the entire world. Why is uranium important? Well, obviously, it's a main ingredient in nuclear reactors. In my opinion, nuclear energy is going to be a primary ingredient today and well into the future, despite what we hear from environmentalists regarding our energy needs. In my opinion, uranium can't go much lower in terms of price. It has been absolutely hammered over the past 10 years or so, down probably 80-90%. So in my opinion, the downside is very low, the upside is very high. Let me mention one last thing. I know many commenters are sensitive to this one, gold and silver. I have not sold a single bit of my personal gold and silver. If you are nervous because gold and silver are down about 10% this year, then maybe you shouldn't be an investor. Maybe you should just keep your money in a bank account, etc. In my opinion, gold and silver are long-term holds. Furthermore, again, take a look at the slide, or even better, go to Barron's.com. Barron's just this past week had a cover story recommending, that thing called gold. They specifically recommended in Barron's, the news publication, the business news publication, buying gold and why you should have it as part of your portfolio. I'll leave it at that. Some things that I'm considering, some things that I'm looking at. Again, I'm not necessarily recommending you do so, but there are some ideas for you to do the following. 1, ADX. This is a closed-end mutual fund. I'll let you Google the differences between closed-end and open-end mutual funds. But the point is, this particular fund that's been around since 1929, I said 1929, men, this mutual fund is basically a copy or runs very close to what the S&P 500 does. What I particularly like about this fund, if you're looking to make a quick buck, if you will, I don't know about you, I certainly am, is that next month, or at least in the month of November, it should be paying around $1 or so dividend per share. This could make a nice quick hit for some of you, $1 per share on a $16 stock. Again, it's just an idea. Next one I've got is a REIT, a real estate investment trust. I've mentioned these before. I like rental real estate. I don't like to own rental real estate directly. I would prefer to own it through a REIT. I don't want to get a 3 a.m. phone call about how the plumbing is burst. Here is a unique REIT idea for you. SAFE, S-A-F-E. This is a land-owning REIT. They own the physical land that a building, that an office building, that a hotel, etc. might be sitting on. They are the landlord. Typically, again, generally speaking, the hotel, the office building, etc., doesn't own the land, the physical land that it's sitting on. This is an idea. Again, this is a relatively new REIT. They pay a 3.1% dividend. I expect that dividend increase. I think that in the long term, this is a very conservative play on the future development of the United States. Furthermore, another idea that I've got, again, this is a little bit speculative, is VNOM, V-N-O-M. This is Viper Energy Partners. In my opinion, the trend for oil prices is up. This is a great way to play that trend. This provides you a nice 5.6% yield on your money that's based on the mineral rights that this company acquires, specifically focusing on the shale regions of the United States. Again, in my opinion, a terrific play if you believe that the price of oil is going to continue to trend higher as it appears to be. Another idea, talking about trends, if you believe in the melt-up theory and the melt-up thesis that some are suggesting regarding the U.S. stock market, at least for the foreseeable future, is IBB. Specifically, this is a ETF that holds a number of different biotechnology companies. I highly recommend you do some research on biotechnology companies. there can be some tremendous gains in these biotechnology companies. Similar to what we saw in 2017 with some of the speculative cryptos that doubled, tripled in a very short period of time. Some biotechnology companies can do the same thing. However, again, correspondingly, as you can imagine, you can get absolutely destroyed. One nice way of getting on to a potential explosion in the biotech industry is getting into IBB, the iShares ETF for the biotech company. Last one is a currency play that I like. It is FXF, Franc Xylophone Franc. This is a play on the Swiss franc versus the US dollar. In other words, by buying this particular exchange traded fund, you are betting that the Swiss franc will rise against the US dollar. In my opinion, interest rates will start rising in Switzerland in the relatively near future. The Swiss interest rates effectively throughout anywhere in the world are the lowest as low as they can be. That have been negative for some years now. So the point is, I don't think they have any further, they can't fall much farther. They're probably going to come up. I think they correspondingly will take up the currency and correspondingly can make some money. If you will take a look at a chart using a program, for example, stockcharts.com, free of charge, you can look at a chart on FXF and you can see the type of trend that I'm talking about and the type of trend that you can see in all these things that I've talked about. Quick summary here, men. As I mentioned on the last video where I was recommending that you get a shareholder account in something like Webull. And again, it doesn't cost you anything. There's absolutely no downside to you. I can tell you for a fact it is 100% legitimate. If your goal is financial independence at a relatively young age, you've got to start building additional streams of income. You've got to build more streams of income than just your single job. You've got to get other things going in your life to generate money, specifically money while you sleep. That's what assets do. They feed you. They make money while you sleep. Even if you get a small stock like ABEV, like I got for free when I set up that account, the point is, hey, it pays a dividend. Or maybe you were lucky and you actually got a share of Google, which is trading at about $1,900. Again, I highly recommend all men, especially young men in particular, start compounding your money today. Start doing things that have no downside and upside like I've talked about. Gentlemen, as always, hit the like button if you found this useful. John Galt, out.